Welcome to RANsquawk's e-morning briefing for Tuesday 23rd of June 2009. We've just gone through 8:30 now in London, taking a quick check round the markets. In terms of where we opened up, it was pretty much a continued theme from where we left off yesterday, very much risk-averse trade with a weaker opening in the equity markets and higher in fixed income, as well as some strength into the dollar index and commodities lower. Much of that stemming from the losses we saw on Wall Street, of course, on those World Bank estimates that caught much of the focus, cutting the growth forecast for 2009 and 2010 for much of the major economies, the US, Japan and Eurozone included. And then also some pretty downbeat comments from Rubini. Saw the Dow and SPOOs finish down around 3%. And knock-on effects in Asia, they continued that theme, with the Nikkei finishing down 2.8% and JGB's up quite sharply following the uptick in treasuries. As mentioned, then that continued into the European morning, and a couple of other headlines I'd just like to make you aware of did come out overnight out of the US. The White House said that they expect to see unemployment rates at 10% in the next couple of months. And elsewhere, though, with much of the focus now turning to the Fed interest rate decision, which we'll see tomorrow, Goldman Sachs have said this morning that talk of central bank tightening is premature, and the bank bets that 10-year Treasury yields may fall 30 to 40 basis points. One of the other things to come out on the European fixed income front, obviously one of the major events this week will be the one-year funding that the ECB will be performing, the first time they've done since DEC 07 as part of their announcements from the last ECB rate decision. The FT writing the ECB, they're on track to deliver a record-breaking stimulus by stealth in the Eurozone economy tomorrow, as the first ever offer of unlimited one-year funds could see demand running to several hundred billions of euros. Analysts said demand likely to exceed the previous record of just shy of 350 billion injected in the single ECB operation in December of 2007. Elsewhere, it's an update as well on the geopolitical front. North Korea, they've said that they've sent a message to Japan Coast Guard saying that they'll conduct military firing exercises off its east coast in daytime hours between June 25th and July 10th, according to GG Press. One of the main things, though, to come out in the last 20 minutes or half an hour that has seen a bit of a turnaround from the opening markets is Moody's. Their chief economist has come out and said that US AAA rating is safe unless government unable to bring debt back under downward trajectory. That's Shillito of Moody's also saying that the dollar's reserve status will not change anytime soon. So we have seen a bit of a reversal at the moment. Equities have grinded off their lowest levels and taking a bid as we're heading towards 9 o'clock in London, and then in turn weighing on fixed income. And commodities also seeing a bit of a bounce on those headlines. In tandem as well, following that World Bank focus from yesterday, World Bank's top economist saying in a Business Spectator interview that the World Bank says that the week's downgrades are reflecting actually what has already happened. Andrew Burns saying that basically what that means is that in our view the worst of the crisis is already behind us, so a bit of a backtrack from what we saw yesterday. Elsewhere in equity news, two things worth noting. Peugeot had a profit warning this morning, opened down around 4% and still trading lower at the moment. And for the ongoing Xstrata and Anglo American, we saw overnight that Anglo rejected Xstrata's proposed merger, saying that the bid was unattractive. We'll see whether Xstrata can sweeten the deal at all and come back to Anglo American or their major shareholders. Looking ahead then on the calendar for what's to come. We've already seen the manufacturing PMIs out of France and Germany pretty much mixed to lower on the German numbers. Attention then will turn to the OECD. They're giving their economic forecast the first of the next quarter. We'll see if they're any better in terms of what the World Bank have already given yesterday. And then from the US today, attention then turns to the housing market, where we'll see the existing home sales report for May. Analysts again looking for a minor improvement of around 4.82 million or 3% on a month-on-month basis.